Good morning, I'm George Caravalis. I try and solve the problem of how to unlock the world's sovereign wealth capital and place it in the hands of creative entrepreneurs like yourselves, and also ultimately in the hands of the world's rural poor, as was touched on, a billion of them, to lift them out of poverty.
Good morning. I am Liliana Rizor, founder and CEO of Suprafin, a wealth tech platform that leverages crypto assets to bring financial inclusion. Crypto assets are related to the blockchain, so Suprafin leverages the blockchain through crypto assets as well as artificial intelligence, two emerging technologies that can bring financial inclusion globally.
I'm Freddie. I'm founder and CEO of Credit Kudos. We are a credit reference agency based here in London. We use alternative data to make more accurate measurements of creditworthiness, and that is particularly beneficial to those that are financially excluded because we can help unlock access to credit at fairer prices where otherwise people would be rejected or completely overlooked.
And Ben, you're
Hi,
next.
my name's Ben Joachim. I'm the founder and CEO of Disperse. I spent the last 15 years working in the aid industry, came to the conclusion that the existing banking system really wasn't built to meet the needs of the aid industry. It's slow, it's expensive, and it's opaque. So we're building a new type of financial institution using blockchain technology and starting to work with a number of governments and leading actors across the globe.
And I am Dominic Hobson. I'm from Hobson Cardew. What we do is market research among financial institutions and financial market infrastructures. Now, we don't have very long this morning. Our topic is financial inclusion. I'd like to say we'd welcome questions from the floor, but you appear to me as a bright beaming light, one of those things you see when you have a near-death experience. But I think if I put my hand up, I can just about see. So it'd be great if you joined in and asked questions as we go along, so I'll keep stopping from time to time to ask that. But in the interest of being efficient about this, I'd like to ask each of our panelists a very direct question about how their business is promoting inclusion. And perhaps almost at random here, we could start with you, Freddie. Tell us what you're doing at Credit Kudos to enhance financial inclusion.
So credit scores and credit reference agencies currently are quite a blunt instrument. So they base the decision as to whether you're creditworthy on a number of sort of simple factors that typically revolve around your propensity to repay previous credit agreements and also your length of history in a certain place or a certain location. And so for a lot of people, depending on which data you look at, about 12 million people in the UK, they don't work very well. And that means that those individuals, although they still need credit, are forced to turn to higher cost forms of credit or get no response at all. And so what we're doing is capitalizing on the availability of new data, specifically PSD2, which is a way by which we can access really granular information from an individual's bank account. And we're using that alongside our own platform to build predictions of creditworthiness that lenders in the UK market and now also other markets in Europe can use to lend against. And that means that individuals who were previously excluded can now get access to fair prices of credit. And to give a tangible example, we recently were awarded 2 grants by the government, so one working with a lender that serves NHS trusts, another one working with the credit union that serves the police and military forces. And in both those cases, we're using this data to lend to people in those groups that were excluded. So for the military, often people live on barracks or don't have a registered address, which is how you typically perform a credit search. So for those individuals, we're able to use their banking behavioural data to score them and allow them a line of credit. And similarly, with NHS workers, we're allowing them to advance salary payments so that they don't have to use, for example, payday loans.
Thanks, Freddie. You've got some fans in the audience. So do they all work for you? They're happy clients, perhaps. Okay, so good. Ben, tell us what your business does to promote inclusion on the humanitarian aid side.
So as I said, when we look at the existing financial system in context of the aid industry, money moves relatively slow, it's expensive and it's opaque. Speed is important, especially in the context of responding to a humanitarian crisis, where the money arrives somewhere in 2 days or 2 weeks can literally mean the matter of life or death. Obviously, banks are charging upfront banking fees, offering poor exchange rates, and therefore that's money that's not getting to the cause or to the end of the chain, as it were. And that lack of transparency is really important. In the majority of cases, we want privacy within the banking industry, but when we're talking about public funds, charitable funds, whether it's you donating £10 to a cause or the British government distributing 10 billion annually, the question we ask ourselves is, well, what happened to that money? Where did it go? How was it spent? And most importantly, what was the impact? And as I say, the existing banking system just really simply doesn't allow that. So what we're building is a financial backbone. Some could describe ourselves like as a challenger bank for the aid industry. That financial backbone that enables existing actors, existing players to integrate into our system. So whether it's integrating donation channels at the first mile, or in the context of financial inclusion, how to integrate last mile channels, whether it's mobile money, whether it's voucher systems, whether it's insurance systems, for example. And how do we build that new type of financial institution that really enables money to flow from end to end, from donor to recipient? And then how do we start to aggregate that data and ensure that the money that is being distributed is having the greatest impact on those communities and those individuals that we look to serve?
Ben, to be clear, are you able to completely disintermediate the banking system, or are you still reliant on people having bank accounts?
So our users do not need to have bank accounts necessarily. We're a regulated financial institution, regulated by the FCA. Money comes into our system. It's held in segregated bank accounts with PRA-regulated banks. We can then distribute funds through our system. Individuals or organisations hold an account on our platform. At the end of that chain, it may be that those individuals or organisations wish to withdraw or redeem those funds. They may be able to do that into their own bank account or into a mobile money account, for example. So we're not fully disintermediating that system, but...
And are you able to change money from one currency to another as well?
Yes.
Okay, and where do you get the rates from?
So through banking partners, yeah.
Right. Okay, thank you. Liliana, why don't you talk to us about Superfin and how that promotes inclusion?
So 53% of the world population does not have access not only to credit, so we heard about credit quotas, but also diversified portfolio of investments. Crypto assets is a new asset class that is expected to take over all financial instruments. So if we believe that all financial assets will at one point in the future will become tokenized, then the way to start is with crypto assets. Crypto assets can be, you can create a diversified portfolio of crypto assets with small amounts of money, from let's say £100 to larger amounts, because crypto assets are fractionable. So Suprafin leverages cutting-edge investment management technology like wealth tech, which is already disrupting the wealth asset management industry, and combines it with a new asset class, crypto assets, because crypto assets related to the blockchain crosses borders, is borderless, and allows us to bypass existing infrastructure or legacy technology and legacy banking systems to bring financial inclusion to those people from all over the world that currently can access diversified portfolios in the typical asset classes.
Liliana, to be clear for the audience, are you looking to tokenize existing financial assets, or are you looking to tokenize asset classes which are not yet available in convenient forms?
Good point. So let's define crypto assets. Crypto assets, according to the FCA, includes 3 categories. Exchange tokens, and those are cryptocurrencies related to public blockchain like Ethereum, Bitcoin, Neo, Litecoin, etc.
So you mean cryptocurrencies in that case?
And then utility tokens, those were cryptocurrencies issued by companies that are not linked necessarily to equity or fixed income, but rather where they issue these cryptocurrencies to sell their products and services in advance to raise capital. That's the second category. And the third category, so we have a lot of cryptocurrencies in the exchange tokens and utility tokens. The third category are security tokens. Those are future tokens. Well, there's some few already issued, but where the collateral is equity, fixed income, or other securities. So hence, if we add that category, then we can tokenize everything.
So you're making all these types of crypto asset available to your clients?
Exactly,
Okay,
exactly.
Perfect.
But it's now that we make it available, our platform brings the asset management component. It evaluates the 2,000 cryptocurrencies that currently trade, selects the best. It's building the investment and risk models to assign risk score to each cryptocurrency so that we can build portfolios, diversified portfolios of crypto assets based on the client's preferences for risk and sectors.
Right, so you put together for your clients portfolios of utility, exchange, and security tokens.
Exactly, and I
So
don't
you're
want to
an
say
asset
you,
manager.
me, but it is the platform. So it's like a robo-advisor. WealthTech is...
But you're regulated as an asset manager?
Well, exchange tokens and utility tokens are not regulated in the UK. Security tokens
No,
are.
I meant you, your business, Superfin. How are you regulated?
Well, we're a startup. We're launching on March, April, on the first two assets, on exchange tokens and utility tokens. We wouldn't be regulated, but if we have security tokens, we'll be regulated.
Okay. Now, George, I'm sure you were listening intently to that talk of tokens. Tell us about how your business makes use of technologies like that to enhance financial inclusion.
So I was invited to work last year by the state government of Amapá in Brazil to solve a very specific problem of deforestation and illegal deforestation. And the Amapá has some of the most pristine Amazon in Brazil, and yet it's probably the poorest of the 29 Brazilian states. What they wanted to introduce was the notion of forest preservation as an export. So the key outcome they were looking for is how can you pay a small rural food producer for the work they do in storing carbon. Very, very simple. As a farmer said to me down in Brazil, we have no access to credit, full stop. The reason why is that we're terrified of borrowing from a bank. The second we default, we know the land is going to be confiscated from us. So we don't borrow. What that means is that they're trapped in poverty at the worst end of the supply chain. The dream, the vision is a world where companies would purchase forest credits issued by both governments and indigenous communities as well as small rural farmers, and that would act as an annuity payment for their work of preserving the rainforest on their land, and that payment will be converted into a tractor, warehousing, packaging.
Are you able to get them, if you like, property rights in the forest? Is that sounds crucial to the credit?
That is the single biggest challenge. There is a history in Brazil of the Amazon being given over periods of time in the 60s and 70s by the government for small farmers. The introduction of blockchain as a digital ledger for land rights would be a game changer to protect both indigenous communities and small rural landowners.
Mm-hmm. Anyone burning to ask a question? You can put your hand up if you are.
Right, my name's Alex. What you're talking about the tokenisation and bringing financial services and inclusion to unbanked and type thing sounds fantastic, right? Obviously, it sounds amazing. It's a no-brainer. But what my concern is, and what I'd like you to comment on is once you have this amazing idea that is really good, it's basically going to be taken over by JP Morgan and UK, all these mega institutions. And actually, what is actually going to be the real effect of we've all got banking facilities, we've all got banking services and financial services, we've got all this shit, we're depressed, we're committing suicide, we've got Brexit, it's not working for us, so why are you saying that it's going to be so great for all these other people? And my point is not to contradict what you're trying to do, which I fully believe in and think is amazing, but the fact that actually once these technologies, the blockchain technologies and these capabilities begin to be appreciated in the broader spectrum and the big companies start to get around the regulation, they're going to take over and they're going to use this to give them Disney and corporations and exploit them and make them miserable and give them 0 hours contracts and
Yes, so just to be clear, is your question that your concern is that things like what Freddie is doing will be taken over by large corporations, or are you concerned that large corporations will take over in a more systemic sense and then integrate these people who presently don't have access to credit or income into their vast consumer economy? Is that your...
Either way, whether it's like Relax being bought out by Cadbury or whatever, either way.
I think we've got the question. So what's your answer to that, George? Is a corporatist takeover is imminent as soon as these technologies take off?
That is a very, very important question. And what actually needs to happen is a complete remake of the capitalist financial system. This is one of the big questions. Is there is absolutely no point in this new generation of sustainable green ventures being owned either by the investment banks that created the systemic heart failure that we had in 2008, or by the tiny handful of technology entrepreneurs that created a highly addicted generation off the back of these technologies. Whoops, sorry.
Yeah, don't fall off the stage.
The ownership of these new technologies actually needs to be owned by sovereign wealth funds, ultimately taxpayer money around the world. There needs to be a fundamental shift in the way that these projects are funded. But actually, there is a role for the big investment banks and investment management houses, because capital needs to be redirected. Capital needs to reward those companies that actually do the right thing. And so they actually have a very important role in facilitating the redirection of capital into corporations that are actually acting correctly, and so they should be rewarded by a higher share price. And secondly, those governments that are acting correctly.
Freddie, you're trying to democratize access to credit. Are you a creature of JP Morgan trying to suck more people who can't afford credit into this credit-driven, consumer-mad economy?
Absolutely not. I think there are two things looking at our market. Firstly is actually, if you think about the incumbents, there are three incumbents in the UK, they're all US businesses. No one ever says, I love my credit bureau, and no one ever chose to be a customer of them. They're a customer by default. So actually, and we've seen this working with consumers, people are smart and they realize this, and they're actually really interested in taking control of where they choose to hold their data. And in parallel to that, we've got this open data movement that was talked about earlier, that means that the sort of pipes now exist. And you think about big banks like some of the ones you named, they've had this loyalty by inertia for so long because they have the data and no one else can access it, that they can provide the better quality of service. But that's being removed, that this data is your data, and we have things like GDPR in Europe that really enforce that. And so I certainly think that consumers will vote with their feet, and they'll have the opportunity to choose which services they engage with, and those services will have to give some kind of value exchange.
Ben, you're looking to create, in effect, an alternative financial infrastructure, an alternative set of rails for people to use. The moment it's directed to humanitarian aid, could this possibly become an alternative to the bank-controlled infrastructures which are used by the conventional banking system today? Can you see this having a wider application?
Yes, but that's certainly not our focus. We're building this for the aid industry as it starts to grow and it starts to expand. What does that look like? What does that look like for the wider non-profit industry? At the moment, we are owned and governed by several individuals in essence as an early stage startup. We have a founding team, we have some early stage investors. The long-term question for us is, what does it look like where we move to a model where the industry, our users, own this platform, govern this platform. Now, that has to be seen as a journey. I think we can't just go to our users and say, buy our service, use us now, and you can own it. We have to look to where the money is to be able to grow and to be able to scale. And so, our long-term vision is that we're building a distributed financial institution for the aid industry. What does that look like from a governance perspective and an ownership perspective? And as I say, we see it as a journey. How do we get to that stage, as opposed to how do we start with that at that stage?
Mm-hmm. Any other questions from the floor?
Yes. Hello. I'm at the back. Chris Middleton, left. There we go.
Waving at the back.
I'm right in front of you. Chris
You're just a
Middleton
white
from-
light to me, I'm afraid.
I know, I have that.
It's almost a
effect on
religious
people.
experience listening to you.
Thank you. I can't remember my question now. Anyway, yes, it's to do with cryptocurrencies, digital tokens, and so on. One of the problems with tokenizing things is that all of these things, cryptocurrencies, are essentially worthless unless they're tracking a dollar or linked to a commodity, unless you can work out the cost per watt of mining them. And the energy costs of cryptocurrencies are frequently completely ignored. There are plenty of examples of people who mine for cryptocurrencies who don't understand they've actually paid out far more in hardware and energy cost than they're actually making back in terms of trading the currencies. And so the environmental impact of all of this energy consumption is rarely considered. And I wondered if you have any comments about that.
Yeah. Well, actually, that's an excellent point because assessing, so currently a lot of people that invest or trade cryptocurrencies, they do it based on momentum and with no know-how fundamentals. So our platform will evaluate all cryptocurrencies, so the ones you're referring to are what we call exchange tokens, and evaluate them, and that will be a factor, for example, because if it is completely inefficient when it comes to utilizing electricity, then that's a negative factor, it's a huge risk. And so currently there is a huge market inefficiency in terms of the current prices of these cryptocurrencies don't reflect the true risk. Now, financial markets have always been inefficient, and this is why we've had a lot of bubbles which are accelerating, meaning people don't understand or don't have all the information, and then finally they figure out what the right information is, and the market either goes up too much or collapses. Cryptocurrencies is a new market, and hence there's more of that. But our models will have a fundamental analysis, so that's a great factor to consider. And there are many, many cryptocurrencies linked to all kinds of blockchains, and blockchains are improving. And so obviously we need to reflect the ones that are more sustainable blockchains as opposed to the ones that are non-sustainable.
What about his question about stable coins?
Sorry, what's your question about stablecoins?
They're linked to a commodity or to a fiat currency, and therefore they are more.
Yeah, so
less
if it's linked to a
volatile.
commodity, it wouldn't be a stable coin. If it's linked to the dollar or the pound, those are stable coins that are
Okay. But
relatively
you as an
volatile.
asset manager looking at those as an asset class, they don't have the vast energy consumption of.
Stable coins don't. So a stable coin is not consuming. They're not mine. They're just backed by something else. So I can create a. They're almost considered, one could call them even security tokens. They are backed.
You don't need to
by
explain them.
dollar
I just
or
wonder
pounds.
if you're
Sure.
looking at them as an asset class for your customers to invest in.
Yes, because it has lower volatility, and to create portfolios of different risk profiles, you need to combine them with stable coins. You may have someone that says, I just want a bunch of stable coin portfolio. Let's say you are in a country with high volatility, high inflation. I think Argentina had once. Really high inflation.
Okay. We've only got
you don't want
a minute left.
You don't want to have the Argentinian peso. You say, I want a basket of stable coins that has a bit, maybe it's backed by the Swiss franc and the dollars and the pound.
Okay.
Like,
Can I stop you there?
the
Because we've got 50 seconds
Sure.
left now. But brilliant.
Sure.
Thank you.
Thank you.
Can we just close this off, I think, just by asking each of you what is the biggest obstacle you face to success? Is it incumbents? Is it the shortcomings of the technology, or what? Perhaps, George, I could start with you. Is it the demand of your investors for massive returns, or what?
The biggest difficulty is the gap between the capital that wants to be deployed in tackling the 17 SDGs and the investment readiness of the projects and the enterprises. There is a distinct lack of funding. When we talk about financial inclusion, that also needs to include the people here in the room, the entrepreneurs, the founders, the teams that need to be funded and paid to get precisely their companies up to a point where they can be funded. And the venture capital industry is not doing enough.
It doesn't really exist. Freddie, what's your biggest obstacle?
I think transparency. There's so much misinformation and so much complexity in financial services, and we're talking about health, not wealth, with these people and these people that are trying to get access to credit. So trying to just get rid of all of the obstacles for them, I think.
Getting the data from their bank accounts, and is that what you're saying?
I mean, technically, that's straightforward. It's making people understand which data is theirs, where.
What if you have more than one bank account?
That's all possible.
Okay.
Yeah, it's more of a visibility for consumers. You know, we all have credit scores in this room. We all have credit bureaus that have our data. A lot of people don't even know that goes on.
And all your clients consent, don't they? So they can give you whatever they like.
Exactly.
Ben, what's your biggest obstacle, very quickly?
So I'll reflect the point about access to capital. Certainly, what we're trying to do in essence is build a global financial institution. And, what we've seen within kind of the emerging challenger banks, especially here in the UK, is that it needs a lot of money to be able to compete with those established or those incumbents. I think your point about transparency is really important, because we all here talk about transparency and we think that greater transparency is a good thing, but what does that actually look like? And from our perspective, for our stakeholders, it looks very different if you're the British government versus a beneficiary in a refugee camp in Malawi, for example, and everyone in between that. And so when we ask ourselves, what does redefining, an industry look like? Actually, there are some pretty big, tough questions there. And obviously, from a regulatory perspective as well, everyone asks the question of, well, how do you get money into Syria? Well, blockchain and technology doesn't solve that on its own. There are some big, complex questions that we need to address here. And yeah, as I say, technology.
Well, Liliana, what I'm hearing from your fellow panelists is use our system. That's the way to clear the obstacles we face. Is it the same for you?
Sorry, clearing the system for...
Your other three panelists have all in different ways said, start using us. That way we'll clear the obstacles to our success. And I assume it's the same for you.
Exactly, but just to add on the obstacles, I think we have too many cowboys out there because crypto assets is a new industry, so we need more people with the right background to enter the industry and build platforms like my platform. Yeah, we don't want to be the only platform, but we want more people to enter asset management of crypto assets, because without it, you cannot grow the industry.
Okay. I think we've run out of questions.
No, that's it. You've bamboozled them with all of these tokens, so please leave.
Okay.
Thank you.